Today, I want to dive into market seasonality, specifically why September often feels like rainy days for investors. Don't believe me? First trading day of September, look at all the red on the screen. If you're planning trades this month, stick around. I'll break down the history, the reasons behind it, and spotlight the best assets to consider buying or selling. Let's get started. Hey, Tom Gentile here, America's Pattern Trader. Welcome back. Before I get started, if you're new to pattern trading, you can check out all my free and premium stuff down in the links below. So, first off, what is market seasonality? It's the tendency for stocks to perform in predictable patterns based on the time of the year. And September, well, it's got a notorious reputation. Since 1928, the S&P 500 has declined an average of 1.2% in September, making it the worst month on record. Over the last 20 years, that average has dipped down to around 1%. It's a slow burn at the very least. Now, keep in mind, this is the S&P we're talking about. Many stocks push that index down. Well, they do much worse during that same time frame. So why does all this happen? Well, there's some theories around. One is the big factor that mutual funds and hedge funds sell off their losers for tax purposes by the end of the fiscal quarter, which is end of September. Also, summer vacations end. So that means traders are returning. Volatility is spiking around that time frame. Now, historical events like 2001 and 2008, the financial crisis, happened in September. That adds to the gloom. But remember, seasonality is not destiny. It is a pattern. Now let's talk about opportunities. Even in a weak month, there are some ETFs and some stocks that you can find that will buck the trend. Treasuries often hold up better. They act as a hedge when the markets get risk adverse. And also the US dollar shows strength in the month of September. That's because when markets drop, a lot of traders go risk off and money moves into the US dollar. And logically, it's going to get stronger during these periods of weakness. Now, real estate tends to struggle. It's only gone up 39% of all Septembers that I can see on record, the worst among the 11 S&P sectors. So what is actually bullish in September? Let's take a look. Well, Nike on average goes up about 3.77% for gains in September with about a 65% win rate. Now, a lot of that's back to school shopping that helps boost those sales. Delta Airlines up about 3.33% on average, 56% of the time. And airlines themselves, really surprisingly, they defy the market downturn. Bristol Myers Squibb, that gains about 1.5%. It's about a 60% win rate over time. That benefits from defensive pharma profiles. But these kind of win rates, they don't get me out of bed. For best patterns in September, I need to look to my money calendar. My money calendar has over 10 years and millions of data points to show me the very best historical patterns happening right now. And in the month of September, there are a few. The number one pattern I see in September is UUP. This is the double dollar index. For 9 of the last 10 years, UUP has gone up starting today for the next 39 days and averaged about a 1.86% return. Now, the projection based on moves that have happened more recently put that number around 2.5%. And that's just because the pattern keeps getting better and better. Like I said, for me to get excited, I need to see a pattern that works 90% of the time. I need to see a pattern that hasn't lost money in 5 years. And I need to see a pattern that gets better and better as each year comes around. And that's UUP. Now, you might be thinking, there's no way, Tom, President Trump's agenda is bullish on the economy, and eventually it's going to be the stock market. And well, over the long run, that might be true. And we are coming off some all-time highs, but not with these shorter-term patterns like UUP. In fact, 4 of those last 10 years that I was studying UUP on was under Trump's first term. And during that term, the pattern went 3 for 4. So the next question you should be asking me is, why do I care about a 2.5% return? How do you make that better? With options. Take a look at this case. Now, these are the call options on UUP with an October expiration. These at-the-money calls are trading for around 73 cents. That's a whopping $73 to hold one call option until October 17th. Now, if UUP goes up 2.5% between now and then, that puts this ETF about 70 cents higher, roughly, than where it currently is today, which would represent a 68% ROI. Much better than the 2.5%, wouldn't you say? Now, this isn't investment advice. There are no guarantees, and UUP could always trade sideways or even fall for that matter. With options, though, you know your risk ahead of time, and you can plan that risk accordingly. To wrap up, September seasonality suggests caution. With the S&P dipping around 1%, if you're not experienced, maybe the best thing to do in September is sit the month out, especially if you're not experienced in bearish trades. And of course, there's always the bullish opportunity with the US dollar or UUP, which we just talked about. Finally, get this, the bearish seasonality will end, and it's going to create some really great opportunities as we get to the end of September. And let's not forget also that the markets could surprise us, especially with factors like a rate cut. So thanks for watching. Hit like if it helped, subscribe for more market tips, and drop your thoughts in the comments. What do you think is going to happen in September, and what is your strategy? I'll see you next time.